You are listening to chartingwealth.com for Thursday, the 17th of September, the big day, 2015. Why is it a big day? Because the Fed is going to be making an announcement about its monetary policy today. We're going to hear from Janet Yellen. First, we're going to look at IYY. Now, I'm traveling right now, and I have tried to make sure that the air conditioning doesn't click on halfway through the broadcast. Who knows? Hopefully that won't occur. My machine in the room's a little cantankerous. What do we see here? This purple line that we have drawn is a very interesting one. It is hard to tell with the screwy chart that we have, but let me go from the 2-day chart to the 4-hour. You can see the line a little better. Actually, the 4-hour chart showing that it crossed through. On the 2-hour chart, the 2-day chart, it did not. But the market has stayed right at this purple line that we have drawn. And why did we draw that? Well, that's where the market had topped out since the big drop back on the 24th. And what the market has basically done, the total market, which is what IYY is, it's an exchange-traded fund, has stayed below that. And you might say, well, what in the world is going on? Well, we had a big drop and everything sort of reset. And the market's waiting to hear what the Fed is going to do. Going to drop over here to the SPY, and you can see the same thing showing up there. We're able to draw a line right around $200. If we go to the 2-day chart on SPY, which again is the Standard & Poor's 500, shows it on the screen here from our good friends at the charting company, freestockcharts.com. We can see again holding on right there at the line that it stayed at, the self-imposed market ceiling. There was a crossover today on the SPY going up, and we also saw at the same time that crossover occurred, we saw that the derivative oscillator also switched over right around the same time that the crossover occurred. And as we start looking back at things, let's go to the Qs, QQQ. That is, of course, the NASDAQ 100. It, again, is doing virtually the same thing, crossing over derivative oscillator and the MACD, the moving average convergence divergence. Continuing, we drew a nice trend line that the market is staying above. In fact, the NASDAQ did, even on the 2-day chart. It broke its ceiling, and we are messing around. I'm just showing you how easy it actually is for those who are watching visually to draw with free stock charts to actually form trend lines. And remember, when you draw a trend line, we have a great training. Bottom up, you draw from the bottom up when it's an up moving market, from the top down when it's a down moving market. So what do we see on the 4-hour chart on the NASDAQ 100? We see, again, strong movement up throughout the course of the day. Actually, the Qs was up. That is, the NASDAQ 100 was up for the day 0.5%. The S&P 500 was up 0.87%, and IYY was up 0.86%. But again, what's very interesting about this, and the short charts have been moving up since the 27th. Well, actually, the market's been moving sideways, but the MACD has crossed over, moving up, topping out, if you'll notice, on those. And again, we've seen that movement over the last 2 days on our 4-hour chart. We've seen the strong up movement. On the Qs, you've seen up movement over the last many days, starting sometime around the 9th of September. And what's the most curious of all, when we're trying to figure out what the market's actually going to do, let's look at gold. Gold took an interesting turn today. If we look at the 2-day chart, which is, of course, not the best chart for trading gold, but it's interesting to watch here, you can see we drew a trend line that was a strong downward moving trend line, actually connected 4 candles. Again, top down is the way you draw your trend lines. It was broken over the course of the 2-day candle presenting itself today. Now, it's not pushed the derivative oscillator over, but price movement has pushed over, as has the MACD on the big chart. Of course, the same thing occurred on the 4-hour chart. It crossed over also this morning. When I say this morning, I'm talking Wednesday morning. The 16th crossed over going up, strong move up, busted through the 2-day trend line. So if you look at gold, what's gold been doing in this market? Well, gold's been going up when the market's been going down. Now, gold is showing that it's moving up as the markets were moving up, but pretty much banging their head on their own self-imposed ceiling. Now, I spoke with traders today, and nobody really knows what the market's going to do. One thought it was getting ready to take off and go down. Another thought it was getting ready to take off and go up. Gold would tell you that the market's actually preparing to go down as gold prices move up. The other charts are indexes for the Qs, that is the NASDAQ 100, SPY, which is the Standard & Poor 500, and IYY, which is the total market, is showing you that the charts are expecting to move up. So what does that tell us when we have our indexes saying one thing and commodities saying another? Well, it depends on what you believe in more. Gold just made a reverse turnaround today. That is interesting. It's like people are hedging, expecting the market to potentially go down, so gold will go up, but at the same time the market's going up. What does that mean? Well, it means you've got a lot of contrary advice, and it's best to wait and see, not to take the risks to get screwed. So that is where we are as we go into a very important day. Pay attention to the charts. Remember, pay attention to the charts and not the noise. Thank you so much for listening to us here at chartingwealth.com. Follow us every day. Please go to our Facebook, go to our Twitter account, follow us on Instagram. We love to have you come to the website, sign up for the newsletter where you'll get these reports every day, and we'll tell you what happened on Thursday, on Friday morning. Thanks so much for listening. We'd love to hear from you at chartingwealth.com.